Hello, guys. It's been a very long time since I have uploaded anything. I've tried many options, many ways to make you educate uh, how to use the market and stuff in free sessions, live sessions. But what I have noticed is that, as always, the psychology plays a very big thing in the market. Though I am giving the levels, the major problem comes where people are not able to understand uh, where to enter. Where do we enter? That's the first question. They keep asking me, sir, you have to enter Karon, sir. Do I enter here, sir? That, sir, this. And please remember one thing that I do trade as well, and getting too many questions from in Telegram or any other stuff disturbs my trading as well. So I came up with a indicator, and I'm going to explain you about the indicator, not the concept, not the scenario, not the condition, only the indicator. This is pure indicator trading. Try to understand this. Whatever tool that you use to trade, this will help you. It doesn't matter what you're using. You're using pivots, yes, it will help you. You're using any other stuff, yes, it will help you. So now getting to the point on what the indicator is and all the stuff. So if you guys remember my post in the channel, Team Taurus channel, Telegram, I have clearly given you these levels. I'm pretty sure you remember that. So if anyone that is there who remember my gap theory would have entered right away when the 15 minutes candle has sustained above with a gap up and the previous swing high has been broken and in a gap up and sustained there, they might have entered into a trade, and that's their concept of entering. And there are n number of concepts of entering into the grain. So if you don't know any of that, let me tell you very clearly, if you don't know any of that, simply follow the indicator. How is the question? So this is the level that I've given, and the next day the market opened here and it started moving. Don't worry, you didn't get any signal from the market. Don't worry. Okay. The intraday levels, in intraday, I will suggest you to use 15 minutes or 5 minutes to take entry. 5 minutes will have a lot of noise. There'll be a lot of noise, guys. So I suggest using 15 minutes, which will be really good. So this is a 15-minute candle. I personally use 15 minutes. So I suggest using 15 minutes. If you use any other time frame, that's not my concern. So let me show you. This is the market gapped up. The resistance level that I have suggested now turned into support. You can see that there are rejections and the price is moving up. You might be very concerned that you might lose a move. You might be very concerned that you might lose a move. You're losing the move. You're losing the move. This is what your mind will tell you. Let it go. I am not going to enter into a trade unless and until I see a signal. This is the signal. So now the question is, when do we consider these signals appropriate to enter into a trade? Yes, every indicator will show you a signal. That doesn't mean you enter into a trade right away. That is the problem with indicator trading. Now you need to know which signal is appropriate to enter into a trade and which signal is not. And in every signal, there will be two types of, uh, you know, two differences in every signal. If let me come to the first point. Now, once I have given you a level, the market has broken that level, and now look at this. There is a signal here. Always remember, once a level is given, it is not mandatory that this blue color candle needs to be coming around this area. There will be a little bit of breathing area or a little bit of room to the price where it might come a little bit higher within 10 points. If it is Nifty, it will be 10 points. If it is Bank Nifty, sometimes it will be more than 20, 30 points. So always remember, once when you see this above just above the support area, which has just turned into support, or resistance for red candle for resistance area. So support turned resistance turned support, and you see this signal. The next candle, once it closes, this is where you will get the signal, the confirmation candle. Now, this is where you'll enter into a trade. Once the candle closes, you'll enter into a trade, and the low of this blue color candle will be your stop loss. For a conservative stop loss, always use a broken candle low. That's a very best stop loss if you can risk that much, or else I'll say the low a little bit lower than the low of this blue color candle will be more than enough. Now, once you got the signal, you can enter here, be it future, be it option. If you're trading an option, always remember, take deep in the money. Deep in the money, like if this one is like 17,324, so obviously you should be taking somewhere around 17,250 CE or else 17,200 CE. Remember that. Don't go for any other strikes like out of the money. We don't know how many days it will take to reach this point. Let's say you got a signal here and you are thinking, okay, he gave this signal and now he also gave a resistance point 17,470. So what I'll do is I'll take 17,400 or 17,500, because at this point 17,300 is around 150 and this one is around 100 or 90. So I'll take this one. Even from this point to this point, when it comes, it will give me 30 points or 50 points. I don't lose much. But let me tell you how many days it might take. In this point, it took 3 days. This is 31st of March. And now it has reached on 5th of April. It took 5 days. How much will the premium consumption be there? If at all you're taking future, that's another concept. But how much of a premium consumption will be there in 5 days? You will lose everything. So I've already given when to enter and which strike to enter. Note those points. Now, once you have seen this one, always remember, once you have seen this one, draw a rectangle here. Now, you know very well that once a resistance has been broken, the price will come down and retest the area. Now, actually, the broken level is this one. And why didn't the price come down below this blue candle? Because this is where your entry is. This is where the institutional investors or the bulls will be sitting with their orders. And so do you from today on. Now, how do we deal with this one? Sir, we entered here, we saw this one, we thought the market is coming down and we have exited our trade and took a short position, and next day the market opened here and we lost all the money that we have earned. Then that is your problem, sir, not mine. Because just the way I said that you need to get this blue candle just above the support area, you need to consider the red candle only just below the resistance area, not anywhere in between. When the market is moving up, yes, there is a gap up. The swing has been broken. The swing has been broken, you can see, and the market is moving up. Now, it is very clear that the character has been changed in the market at this point. The character has been changed from bearish to bullish. So now you will only look for a bullish trades, not bearish trades, because bearish trades are profit booking. You don't know how far it might come down. You don't know how far it might go up. So this is your area of entry. And once the price is coming down a little bit, you can average your price to reduce your stop loss. It will be hardly 10 points to 15 points of stop loss. Trust me. Backtest this strategy with this concept, not any other. Sir, if I get a signal, I'll go long, and right away I get a signal, I'll go short. It's up to you, sir. That is your concept, not mine. And that's not what I'm explaining you. So now the price is moving up. You got this one. Let me tell you one thing. In a market, there are sellers, there are buyers, there are scalpers, there are swing traders, there are long-term traders, there are n number of people. So once the market started moving up, once there are 3 consecutive bull candles, you know very well that there are many people, price action people, who use naked price action. After 3 consecutive bulls, there will definitely be a bearish candle because they are changing their position. Until now, because of this fall, they might think that the market is going down and now they might be changing it. Or the selling positions might be changing. Something, whatever it is. This is not a confirmed bear confirmation candle because it came around in the middle area of resistance and support, first point. And the confirmation candle, in the confirmation candle didn't break the entry point of this candle, or else your stop loss is not hit. In a simple word, you should sit in the trade if your stop loss is not hit. If you're a scalper, this might be good enough for you. There might be 3 to 5 points here. You might be entering with 1,000 or 2,000, make 5,000, 10,000, get out of there. That's the kind of scalping I know. Okay, so now look at this second scenario. Once price moves up, it will definitely come a retest. And if you see a bull candle with a confirmation candle, you can enter. Or else, if you already saw this, you are very good in memorizing stuff. You have drawn yourself a level. You have placed your entry here at this point. You're waiting price to reach this point, first point, that is 324. You have entered and you're not panicking when the price is coming down. You entered another area once the black bar has been closed, and now the market is moving up. So if you see something like this, your stop loss is only 10 points. Remember that. If you're not able to risk that 10 point, that means your lot size, the lot size that you're taking is beyond your reach. Reduce your lot size, you can sit. So now the market is coming down and you have seen another confirmation. Now happily breathe yourself. Happy breathe. Now look at this. This area will not be touched once again. Happy. And now the fourth point. If there is a resistance, the blue candle should break the resistance or the confirmation candle should break the resistance. That's mandatory. That's mandatory. And once the price goes up, after that, wait, because the price will least reach the high of this blue candle. I've already told you. The price will reach the high of that blue candle. Look at this. Entry right away. This is your second entry. And this one will be your stop loss. This one. Hardly 15, 20 points. Now the price started moving up. This is your resistance area. Now you will book your profit here. You will book your profit here once you see this. It doesn't matter. It doesn't matter. Yes, it did break, but there is no blue candle. It did break. You can book your profit here and wait for another blue candle around this area. There you go. The next day you got it. So what happens now? Again, you saw a blue candle above the resistance area. Now look at this. Absolutely at the high of this area, we got our famous railway track pattern RT. And a retest has also been done. Happy move. You're done for the day. Again, the price came here. Take entry. Take entry. Your stop loss is very low. Take entry. Take that risk of 10, 15 points. And happy move. So, okay. Here, I'm clearly suggesting you not to carry forward. Not to carry forward the position. So, now the next day, the market opened above previous day high. You have a confirmation. Now, this is where it is a little bit tricky. Let me tell you. Once the market opens, and there are 2-3 candles going up and the market starts, this is your stop loss hit, guys. Remember that. So what happens is, after two 15-minute candles, go and check your option chain where you will get to see the resistance and support areas, where the highest sellers are there, where the lowest, where the highest sellers are there in the call options and where the highest sellers are there in the put option. Now you have seen it clearly, and I'm pretty much sure it should have been on that particular day. It should have been around 17,800 or something like that on this day. And at 750, the market started coming down. You wouldn't recognize this because you're only going bullish because it is above previous day high. and you got a signal here and a clear confirmation of the trend. So you will be waiting for the price to reach this area. Now let me be very clear here. Now if you notice something, the price hasn't closed below the candle, but your stop loss will hit. Look at this. And right away, you got this confirmation here. Now, this is where my entry will be. Yes, I would have taken my entry here, and yes, I would have hit my stop loss here, and right away, I'll take another entry here. This is where my entry will be. So yes, whatever the stop loss that you hit will be gone. That's another thing. But straight away, yes. The next day, look at this. At the end of the day, we did get another area where the bulls have entered into the market, or we got a pattern. See, retest within this area, absolutely gone. Now, coming to the point, we know very well that for the past 1 week, 17,800 has been our resistance. What did I say? 17,800. If 17,800 is resistance, let me place it somewhere around 17,800. 17,800. This is something that you need to understand clearly, because this is something that you will have to remember very clearly. So if the market in option chain, if you see 17,800 as resistance, remember one thing, that people are selling 17,800 calls. Very clear. Okay. Why are they selling 17,800 calls? When clearly this is the swing high. Remember one thing, this is the swing high, right? That is the point that I have drawn. If you notice, this is the swing high. Now at swing high that is 17,800, we have a breakout and a confirmation. And now you will take an entry here, but I won't, because 17,800, I have seen clearly that there are number of calls being written. So how is the price moving up? Let me tell you clearly. This is what liquidity is. When there is high OI, open interest, at 17,800, which keeps on increasing, and the price is playing around that level, let me tell you why it will be 17,800. Because there is no level for 17,830 or 40. It's either 17,800 or 17,850. So the price will dance between this area. This is something that you need to remember when you're dealing with option chain support and resistance. Option chain support and resistance, pull it out, because there is no 17,820 or 30 strike to put their money in. People are putting their money at 17,800 and 17,850, and they know very well that 17,800 will not hold and it will come down, because they are the masters of the market. We are just retailers. We grab whatever that we can and come out of the market. Now, you can clearly see the next day. On the previous day, they tried really hard to keep the price up. The next day, there's a very strong fall of the market. Now, look at this. This is the area, the previous day, where we have an entry. We will not take an entry until this bear high is breached. And yes, the bear high has been breached. If you notice clearly, the bear high has been breached with the confirmation candle. Now, why shouldn't we take a bearish entry here? Why shouldn't we? Because 17,700 was acting as support on that particular day. So where is it? Where do we see this? It's around 17,735, this is where we have entry. Okay, that's something that you need to work yourself. I'm not going to tell the rest. Okay, because you need to work, that's when you will understand. So now, the bear entry, I will not take. Just like I will not take 17,800 calls here, I will not take 17,700 puts, or I will not sell a future. So this is a sideways market, clear sideways market that we can notice. But yes, we can catch this one. If at all you're smart, you're fast, you understood the concept, you can grab this one. The next day, you can clearly see that the market has come into the range and then started falling. We will not trade this one. If at all you're a risk taker, you can. We will not trade this one. Clear picture, because 17,600 was acting as support on this particular day, and we can clearly see what's going on. On this volatile day, it is up to you to trade, because look at this. The market gave us a signal at this point, retested here, and right away it went up, again down. It's very choppy, very narrow market. It's up to you to trade or not. The next day, I have seen a clear bear market here, clear bear market. That's something good to see. And sir, are you going to lose? Are you going to leave all this? Yeah, I'm going to leave all that. So now this is the area where the clear bears have come in. Now, I don't know if there are bears or they are going to change the positions in the market, because this is mid-month. And what happens is in the mid-month, they keep changing their positions to the next, expiry. So now this is the area where we have clearly identified as support. This is the area, clear support area. Now this is the liquidity grab, we can assume. Now, every time the market touches this entry, the market falls strong, very strong. See, very strong, very strong, very strong. Every time coming into this point, the market falls. So we will think that the market at 17,700, it's not going to cross. Now, every time the market is coming up, it's either choppy or, it's not that clean. But look at this. Once you got a signal here, 17,621, we know 17,600 was acting as support at the point. So 17,621, we got a signal. Yes, you got a signal here above, but your stop loss got hit, but not here. And we don't consider this one because we need these red and black candles below this level, not above. Okay, this one we did get a signal, but we know very well we need to get the signal above this level, not below. This signal should be here. As we got this one, we did grab this one. Here, your stop loss got hit. This is where you could see clearly a little bit of very small liquidity grab happened. But look at this. Not a single candle has been closed below the level. Happy trading. Look at the soft move. This gives you an impression that yes, it is about to break, it is about to go. Clear indication, no lower wicks, clear strong candles, and a breakout at 245 with a confirmation. The next day, it has tested this breakout candle, and started to move up. And again, consolidation area, again came here within this candle range. A nice hammer formed, take an entry, absolute move, and again, a confirmation. So this is the indicator that we are about to upload, where it will give you alerts, where it will give you the many that you can, you can use this. Let me close this one and show you. You can use this range. It will give you the last two areas of interest. There you go. Entry, it will give you entry, and it will give you exit. And there is also this legend box where you can get entries and exits around here. So this is what this is. If you place your cursor here, this is your first bull entry. To enter into a trade, this will be your first entry. Don't completely rely on these levels. Understand the previous concept on how to use the indicator. That's when you're going to use it. Now this is the best bull entry, and your SL is hardly 36 points, and there are few other concepts that I'm going to close in the next 2 minutes. So these bull candles, these blue candles or the pink candles, if look at this point here, I have given the change of the candle. If this change of candle is beyond 0.33% to 0.45%, then the high of that candle will be tested. It is not going to come down to the low, or it is not going to come to the middle of that candle, mostly. If the blue candle and the confirmation candle both are as long as, both are of equal length, then the confirmation candle high or the mid of the confirmation candle will be tested, but not the blue color candle low. Look at this. I'm showing you here. It's not 0.35 above candle, but I'm giving you an explanation here. See, if both of them are of equal size, not much, 7 and 8, 0.07 and 8%, the mid of the confirmation candle, which is also the high of this candle, is being tested, but not coming to the close of the candle. Mostly it will come down to the close of the candle, and rarest of the rare cases, it will come down to the low of the candle as well. Retest I'm talking about. So that's something that you need to remember. You will understand slowly. So, and one more thing. At the resistance area, you will find these huge blue candles and small confirmation candles without breaking the resistance area. At that point, consider yourself that is where at resistance area, without breaking the resistance, okay, not here it broke the resistance, but without breaking the resistance, you will find these candles. Understand yourself that at that point of time, use less quantity. I'm not saying not to enter the trade, if at all you want to, you can enter the trade. If at all you see a breakout like this, you can enter. Without breaking, no. But if you see a breakout, use less quantity to enter into a trade. Okay, that's it, guys. If there are any doubts, you can message me. This indicator will be live from 1st of May. So the prices and everything will be discussed, presented to you. So that's it for the day. See you guys later. Thank you for listening and whatever. Have a great day.